Two real big events that have happened recently are definitely a new Prime Minister in the UK, and that's Boris Johnson. Now this has increased the probability of a hard Brexit, which is not a good news story, and so you've seen the pound drop as a result of that. The second, which is definitely the most important, is the Fed announcement. We recently found out that the Fed has cut interest rates 25 basis points, which really matched market expectations. And now the question really is going to be, what does the Fed do going forward? Will they continue on with that? Will they pause? And that really will determine, where the markets go going forward. Three big things that we continue to watch. One is, how are the global trade discussions going, particularly between the US and China? There's going to be lots of meetings going on from now to the end of the year. And we'll be watching what each party says, how they think the negotiations are going. And that will give us some indication whether this is going to be a long, drawn-out process, whether a quick resolution will happen, and really the severity of that trade discussions between those two countries. The second is we just recently got the Fed announcement, but the next set of Fed announcements will be very important. And what Fed governors say in between those announcements will give the market some indication as to what we should expect. And that really will drive where market sentiment goes. And the third is earnings coming up in the next few quarters. We are seeing earnings still looking pretty good, but will they continue that momentum? And if so, by how much? Will expenses be driven down, or will there be more revenue coming through from other parts of the world? Will global trade slow down some of those earnings forecasts as well? And that will determine the share prices and the valuations on those stocks. So we have been underweight equities for the last 3 months by about 3%. We've now actually added a little bit back to our equity positioning, still underweight, but we feel with the Fed now backstopping the markets, we should see some continuation of markets going higher up. We're not saying that risks are going away, though risks are still there actually. And what we want to make sure is that we still have defensive positions in our portfolios. So we have added positions to give us a bit more hedges in our portfolio, some more bond allocation as well, and those should help minimize the downside we see in markets going forward. In terms of where we're allocating in the equity market space, it is the US market because we think that's the market that has the best earnings. It has the Fed behind it, and also the consumer confidence seems to be really good there as well. So we feel that's the best market to be investing on the equity front.